All right, welcome back, everyone, for Lesson 4
It's great to be back.
for our AQA GCSE Business Studies series.
Yeah.
We're going to keep diving deeper into this world of finance, and today we're going to tackle break-even analysis.
Ooh, crucial.
This is, I think, a super important concept for any business owner,
Yeah.
aspiring entrepreneur,
For sure.
anyone who is even thinking about starting a lemonade stand.
Yeah.
So before we get into like all the details, all the nitty-gritty of break-even analysis,
Yeah.
let's do like a super quick recap of some of the terms.
Of course. Yeah.
Financial terms that we covered back in Lesson 1.
Yeah, the foundations are really important.
I know you've all been diligently studying,
Yes.
but a little refresher never hurts, right?
Absolutely.
So first up, revenue.
Yeah.
This is like the total income a business pulls in from selling its good or services.
Yes.
Picture it as all the money flowing into the cash register.
Nice.
Then we've got profit, which is what's left over after all the expenses are taken care of.
That's right.
So it's essentially the reward for a business doing what it does.
Absolutely. Yeah. The fruits of their labor.
And of course, there's always the flip side, right?
Uh-oh.
Loss, dun, dun, dun.
You don't want to be there.
This is when a business's costs actually exceed its revenue.
Yeah.
So definitely not a place anyone wants to be.
Yeah.
And then, remember we talked about the different types of costs, right?
Yeah.
Fixed costs, which stay the same,
Yeah.
regardless of how much a business produces, like your rent, salaries, things like that.
Absolutely.
And then those variable costs,
Yeah.
which fluctuate based on production levels,
That's right.
like the cost of ingredients for a bakery.
Yeah.
All right. So those are the essentials.
The essentials.
It's kind of our little refresher there.
Back to basics.
Now, let's shift gears and dive into break-even analysis.
Yes.
Have you ever wondered how many coffees a coffee shop needs to sell just to cover all of its costs
Yeah.
and avoid a loss?
Yeah. That's a really good question.
It's exactly what break-even analysis helps us figure out.
Yeah.
So let's unpack this concept.
Okay.
Break-even.
Yes.
What exactly does it mean for a business to break even?
So essentially, it's that point where the business's total revenue equals its total costs.
Okay.
So it's not making a profit, but it's not losing money either.
Oh, okay.
So yeah, like if you imagine a scale,
Mm-hmm.
that's perfectly balanced.
So it's like walking a financial tightrope,
Yeah.
kind of balancing perfectly between profit and loss.
A great analogy, yeah. So, no, why is this break-even point so important?
Yeah.
Well, for businesses, it's really valuable, and there's a couple of reasons for that.
Okay.
For starters, it helps businesses figure out the minimum number of products
Okay.
or services they need to sell to avoid dipping into those dreaded losses.
So it gives them like a clear target to aim for,
Yeah, definitely a target, yeah.
a safety net, so to speak.
Yeah,
But I bet it goes like beyond just survival, right?
yeah, absolutely it does. So break-even analysis can also give businesses the power to make good decisions, informed decisions about pricing.
Okay.
So should they raise prices, lower them? This analysis can actually help them weigh those options strategically.
That makes a lot of sense. What about keeping costs under control?
Oh, yeah.
Does break-even analysis play a role there too?
Definitely. So by understanding their break-even point, businesses can pinpoint areas where they might be able to trim costs and boost that overall profitability.
Okay.
So yeah, like shining a light on opportunities for optimization.
So it sounds like break-even analysis is a really powerful tool for businesses to gain financial clarity
Yeah,
and make strategic decisions.
it is. It's a must-have.
Now, I'm a visual person,
Okay.
so I love the idea of seeing this like come to life in a chart.
Yes.
And our sources mention break-even charts.
Yes, they do.
So can you walk me through like what those look like?
Of course. So break-even charts, they're a really good way of visually representing the relationship between costs, revenue, and the quantity of goods or services sold.
So like a financial roadmap of sorts.
Exactly.
Okay.
So they usually share several key elements.
Okay.
First, we have the fixed costs,
Uh-huh.
and they're represented as that flat horizontal line
Okay.
because, as we know, they remain constant.
Regardless of output.
Yeah.
Then there's a line for variable costs.
Yes,
And this slopes upward
it does.
because those costs increase as production ramps up.
Yeah, as you make more, it costs more.
Exactly. And we also plot the total costs,
Yes.
which is just the sum of fixed and variable, right?
Absolutely. Just add those two
And
together.
at each level of output.
Yeah.
Okay. And finally, we include a line representing total revenue,
Yes.
which starts at 0 and slopes upward, showing how revenue grows as sales volume increases.
Exactly.
Okay, and I'm guessing there's a point on this chart where those lines intersect.
Yes, there is.
That's the magic.
A magic point.
That's the break-even point.
Yeah.
The visual representation of that financial equilibrium.
Yes, exactly.
We'll talk about.
Yeah.
Where total revenue equals total costs.
Yeah.
So it's like finding X marks the spot
Yeah.
on a treasure map.
Yes.
But instead buried treasure, it's the point where your business starts generating a profit.
I love that analogy. So now let's bring this to life.
Okay.
With a real-world example.
Okay, let's do it.
Remember our hypothetical coffee shop BrewBliss
Of course.
from our previous lessons?
Yeah, their lattes are legendary.
They are. So let's say their fixed costs,
Okay.
including rent and salaries, are £2,000 per month.
Okay.
Each cup of coffee costs them $1.50 to make.
Okay.
That's their variable cost.
Okay.
And they sell each cup for a very reasonable £4.
Okay.
So if we were to plot all of this on a break-even chart, that break-even point would show us exactly how many cups of coffee BrewBliss needs to sell each month to cover those fixed costs and start making a profit, right?
Yeah.
Like solving a financial puzzle.
Like solving a delicious financial puzzle.
Exactly, yeah. So we could draw a chart, but luckily there's a handy formula we can use.
Ooh, a formula.
To actually calculate the break-even output.
I'm intrigued. Math is not my forte, but I'm all ears.
Okay, well, this one's actually pretty straightforward.
Okay, good.
So the break-even output is calculated by dividing the fixed costs by the difference between the selling price per unit and the variable cost per unit.
Okay.
So it sounds a little bit complicated, but it's really not.
Okay.
So let's break it down,
Okay.
Using BrewBliss as our example.
Okay, perfect.
So their fixed costs are £2,000.
Right.
They sell each coffee for £4, and it costs them $1.50 to make each one.
Yep.
So to find their break-even output, we plug those numbers into the formula. So we divide the fixed costs of £2,000 by the difference between the selling price of £4 and the variable cost of $1.50.
Which is 2.50.
Which gives us 2.50, yes.
So 2,000 divided by 2.50.
Exactly.
That means BrewBliss needs to sell 800 coffees each month.
Yes.
Just to break even.
To break even.
And then every cup they sell beyond those 800 contributes to their profit.
Yeah, that's right. Every single one.
It's a lot of lattes.
It is.
But it really highlights why understanding this concept is so crucial.
It really does, yeah. It gives them that concrete target to aim for.
Okay. Now, I know nothing in business is ever, completely straightforward.
No.
So, are there any limitations to break-even analysis that we should be aware of?
Yeah, that's a great question. And you're right to be cautious, While it's incredibly valuable, it does have its limitations.
Okay.
It's not, a perfect crystal ball for predicting the future.
What kind of limitations are we talking about?
So, for one, it assumes that a business will sell every single unit it produces.
Yep.
But in reality, that's, rarely the case.
Yep.
Unsold inventory is a common challenge.
Right.
And, that's not factored into that basic break-even calculation.
Right. So you can't always guarantee that everything you make is going to fly off the shelves.
No
matter how delicious those lattes are.
Exactly.
Okay. So what else?
So another limitation is that the traditional break-even analysis assumes that costs and revenue behave in this perfectly linear way.
Okay.
But in the real world, it's, way more complex than that.
Of course.
Prices can fluctuate.
Yeah.
Costs don't always rise at this steady, predictable rate.
Yeah, for sure.
Think, bulk discounts or sudden changes in the price of raw materials.
So it's like a simplified model.
Yeah.
That doesn't always capture, the nuances and complexities of the real world.
Yeah,
I
exactly.
feel like assuming that you'll always get a parking space right in front of the coffee shop.
Yeah. Like sometimes it happens.
Yeah, sometimes.
But sometimes you have to circle the block a few times.
That's a good analogy. And it's important to remember that the accuracy of break-even analysis is only as good as the accuracy of the initial estimates.
Okay, yeah.
If those are off, the entire analysis can be thrown off course.
Yes. Garbage in, garbage out. Right.
Exactly. And probably the biggest limitation
Okay.
is that this basic break-even analysis doesn't actually account for the dynamic, the often unpredictable nature of the business environment.
Right.
So you've got competition, shifts in consumer demand, a sudden economic downturn.
Right.
These can all impact a business in ways that a basic break-even calculation just might not capture.
So it's a valuable tool,
Yeah.
But it's important to use it with a healthy dose of realism.
Yeah.
And be prepared to adapt to those inevitable curveballs that the business world throws our way.
Couldn't have said it better myself. So let's go back to our BrewBliss example.
Imagine a scenario where a brand new, ultra hip coffee shop opens up right across the street.
Okay.
How do you think that would affect their break-even calculations?
I think that increased competition
Yeah.
would definitely shake things up for them.
It would, wouldn't it?
They might see a dip in sales.
Yeah.
Maybe they'd be forced to rethink their pricing strategy.
Yeah.
Find ways to trim their costs to stay competitive.
Yeah, maybe.
So that initial break-even analysis,
Yeah.
while still valuable,
Yeah.
might need a little tweaking to reflect this new reality of a more competitive landscape.
Absolutely. Would need to be revisited. So it's fluid.
Yeah.
Not just a one-and-done calculation.
Okay. I'm starting to see the bigger picture here.
Good.
But let's not forget that most businesses aren't aiming to just break even.
No.
Right?
No, they want more.
They want to thrive.
They want to flourish.
They want to generate a healthy profit.
They want to be successful.
What happens beyond that break-even point?
Well, that's where the fun really starts. Breaking even, it's just the starting line. Beyond that point, every single sale contributes to the business's profit margin.
Okay. All right. I am ready to explore what lies beyond that break-even horizon.
Let's go. Beyond the break-even point, we have this concept called the margin of safety.
Margin of safety. Okay, that sounds pretty interesting.
It is. It basically gives an indication to the business of how much sales could potentially drop before they start losing money.
So, the bigger the margin of safety, the more breathing room a business has to navigate all those inevitable ups and downs.
Ups and downs, exactly. Yeah. Think of it as that buffer against any unexpected events or fluctuations in the market.
Yeah, I like the sound of that.
It's a good thing to have.
Can we calculate this margin of safety?
Yes, absolutely we can. So it's simply the difference between either projected or actual sales and the break-even point. So let's go back to our friends at BrewBliss.
Okay.
Remember their break-even point was 800 cups of coffee?
Right, 800 cups to stay afloat.
Per month, yeah.
Yeah, what if they're aiming to sell 1,000 cups each month?
Okay, so in that case, their margin of safety would be 200 cups.
Okay.
So it's a difference between their target sales of 1,000 and their break-even point of 800.
Got it. So they have a cushion of 200 cups.
200 cups, yeah.
That means they could see a slight dip in sales and still stay in the black.
It's still stay in the black, exactly. Yeah. That margin of safety provides them with a bit of, breathing space.
Okay.
It helps them to weather any unexpected storms.
This is making me think about all the different factors that could influence a business's break-even point.
Yeah.
What are some of the key levers that they can pull to kind of shift that point in a favorable direction?
So I guess one of the most direct levers is pricing.
Okay.
So if BrewBliss were to increase the price of their coffee,
their break-even point would decrease.
Yeah.
Meaning they need to sell fewer cups to cover their costs.
Makes sense. But I imagine, they'd have to be careful not to
price themselves out.
Price themselves out of the market.
Absolutely. Yeah. It's all about finding that sweet spot, isn't it?
Yeah.
Where the price is something that the customers are willing to pay.
Right.
But at the same time, it ensures that they're generating enough revenue to cover those expenses.
To make a profit.
And make a profit, yes. Exactly.
So it's not just about, crunching numbers. It's, understanding customer behavior.
Yeah.
Market dynamics, too.
It all plays a part, doesn't it?
Yeah, okay.
So another lever that they can pull is around their costs. So if BrewBliss can find ways to actually reduce their fixed costs, like negotiating a lower rent, finding more energy-efficient equipment, then again, that break-even point will decrease.
So even small cost savings can, make a big difference. They really can, yeah, absolutely. And they can also look at ways to reduce their variable cost per unit.
Okay.
So maybe they can find a cheaper supplier for their coffee beans or, those cups and lids.
Okay, so it sounds like there's lots of different strategies they could explore to kind of manage their costs effectively.
Yeah, lots of different ways, different approaches.
Okay.
And then I guess another factor that could potentially influence the break-even point is sales volume.
Okay.
So if BrewBliss can increase their sales, whether it's through marketing campaigns,
Yeah.
loyalty programs, or simply just by, expanding what they offer
Yeah.
to attract more customers,
Yeah.
then they're going to reach their break-even point faster
Yeah.
and start generating profits sooner.
So it's not just about like cutting costs.
Yeah.
It's about
It's about
finding ways to grow revenue as well.
It's about, managing costs,
Yeah.
optimizing that pricing,
Right.
and actually driving sales growth.
Okay. This has been like super eye-opening.
Good.
We've gone beyond just calculating the break-even point.
Yeah.
We've explored this margin of safety concept
Yeah.
and like the different levers
Yeah.
businesses can use to improve their financial performance.
Exactly.
Well, before we wrap up,
Okay.
I want to circle back to something we talked about earlier.
Okay.
Those limitations
Yes.
of break-even analysis.
Yeah, it's important to remember
Yeah.
that it is a simplified model,
Yeah.
doesn't always capture, the complexities
Yeah.
of the real world.
It's like using a map to navigate a city.
Okay.
The map provides like a useful overview,
Yes, it does.
but it doesn't show you every single detail.
No.
Like construction detours,
Yeah.
hidden alleyways,
No, exactly. Yeah. And just like a map break-even analysis should be used as a guide,
Yeah.
not a rigid set of rules.
Right.
Businesses need to be flexible,
Yeah.
adaptable, willing
Yeah.
to kind of, adjust their course as circumstances change.
So what are some of the like key limitations
Okay.
we need to keep in mind
Okay.
when interpreting break-even results?
So one of the, I guess the biggest limitations is the assumption
Okay.
that all output will be sold.
Okay.
In reality, though, businesses quite often have to deal with unsold inventory.
Yeah, that makes sense.
Whether it's leftover coffee beans
Yeah.
or products that, simply didn't catch on with the consumer.
You can't always guarantee that everything you produce
No.
is going to find a buyer.
You can't.
No matter how much market research you do or how amazing your marketing campaign is.
Absolutely.
Okay.
What else? So another limitation is that it usually assumes this linear relationship
Okay.
between costs and revenues.
Yeah.
But things are rarely that neat and tidy,
Yeah. Yeah.
Think about those bulk discounts we talked about earlier.
Yeah.
The more coffee beans that BrewBliss orders, potentially the lower the price per bean.
Yeah.
So again, it's not a linear relationship, but it's a common scenario in business.
Right. And on the flip side,
Yeah.
costs can spike unexpectedly
Yes, they can.
due to factors,
Besides,
totally outside of the business's control.
exactly. Yeah. Sudden increase in the price of milk,
Yeah.
natural disaster that disrupts the supply chain,
Right.
or even a global pandemic.
Yeah.
All these things could throw a wrench into even the most, carefully crafted cost projections.
So it's really important to remember that break-even analysis is based on assumptions
Yes.
that, don't always hold true
Yeah.
in the real world.
In the real world, yeah. And it's also worth noting, I guess, that the accuracy of any break-even analysis
Yeah.
is heavily reliant on the accuracy
Perfect.
of the initial cost and price estimates.
Right.
So if those estimates are off,
Yeah.
the entire analysis
It
can be misleading.
Like building a house on a shaky foundation.
Exactly.
If the underlying assumptions are flawed,
Yeah.
then the entire structure is compromised.
Yeah.
Garbage in, garbage out.
Exactly. And I guess finally, and probably the most important limitation to keep in mind,
Okay.
is that the basic break-even analysis doesn't take into account the, dynamic, often unpredictable
Yeah.
nature of the business environment.
It's like trying to predict the weather.
Yeah.
You can look at like historical data,
You can
make educated guesses,
Yeah.
but there are so many variables at play
There are so many.
that it's impossible to be 100% accurate.
Yeah, a perfect analogy. So bringing it back to our BrewBliss example,
Okay.
imagine that, a brand new, super trendy coffee shop
Mhm.
opens up right across the street from them.
Okay.
So how do you think that would impact their break-even calculations?
Well, that new competitor could definitely shake things up.
It could.
Yeah. If coffee lovers flock to the new kid on the block,
Yeah.
BrewBliss might suddenly find themselves selling fewer cups of coffee
Yeah.
than they had, initially projected.
Yeah.
So that could force them to, rethink their pricing,
Yeah.
explore ways to cut costs, maybe even revamp their menu
Yeah.
to stay competitive.
They might need to, yeah. So, their initial break-even analysis might have been based on the assumption that they had a certain market share
Right.
and could sell a certain number of cups
Yeah.
at a certain price.
Yeah.
But this arrival of a new competitor
Totally disrupts everything.
could disrupt those assumptions, forcing them to adapt and adjust their plans.
So while break-even analysis is this like fantastic tool
It is.
for gaining financial clarity,
Yeah.
setting those initial targets, it's crucial to remember that it's just one piece of the puzzle.
It is, yeah.
Businesses need to be flexible,
Yeah.
adaptable,
Yeah.
willing to adjust their course
Yeah.
as circumstances change.
Absolutely. It's all about using it in conjunction with other factors,
Yeah.
being aware of the limitations
Right.
and keeping an eye on those, ever-changing dynamics.
Of the business world.
The business world, exactly.
This has been like a fantastic deep dive
It has.
into the world of break-even analysis.
Yeah.
I feel like we've demystified
Yeah.
this crucial concept
We have.
and like explored its practical applications in a way that's both, insightful
Yeah.
and engaging.
I agree. Yeah. I hope that our listeners are feeling equipped
Yeah.
to tackle their own break-even challenges now.
For sure. It feels like we've covered so much ground already.
We have.
But I'm curious about something.
Sure.
We've talked a lot about like how break-even analysis can help businesses
Yeah.
make informed decisions, right?
Yeah.
But I'm wondering if there are other scenarios where
Okay.
where this type of analysis could be like super useful.
Yeah, absolutely. So, break-even analysis, it's not just for established businesses.
Okay.
It can be really valuable for startups. Or even, if you're thinking about launching a side hustle,
Yeah.
that kind of thing.
So even if you're just starting out
Yeah.
and like don't have a ton of historical data,
Yeah.
break-even analysis can still provide like valuable insights.
Absolutely. Yeah. It can help those aspiring entrepreneurs,
Yeah.
assess the feasibility of their ideas,
Yeah.
set some realistic financial goals,
Yeah.
and make some informed decisions about pricing and costs from the very beginning.
I could see how that would be like super empowering.
It is, yeah.
Yeah.
It's like having that financial compass
Right.
guiding you,
Through those early stages.
in those early stages, yeah.
Yeah.
So imagine, you're passionate about baking.
Yeah.
You're dreaming of opening your own cupcake shop.
Yeah.
Break-even analysis can actually help you figure out how many cupcakes you need to sell each month to cover those costs.
Yep.
Whether it's rent for your storefront,
Yep.
ingredients, even the cost of those, adorable cupcake wrappers.
Like a reality check.
Yeah, a reality.
Helping you understand like what it would actually take
all it would take
to make those cupcake dreams a reality.
Exactly.
Yeah.
Can also help you figure out,
Yeah.
is your pricing realistic?
Right.
Are the costs under control?
Yeah.
Ultimately, does your idea have the potential to be profitable?
This is making me think about like all the different ways
Yeah.
that break-even analysis
Yeah.
can be applied, right?
It can.
It's not just about crunching numbers in a spreadsheet.
No.
It's about like understanding that fundamental relationship
Yeah.
between costs, revenue, and profit
Exactly.
in like any business venture, really.
In any business venture, it's a versatile tool. You can use it to analyze a wide range of scenarios.
Okay.
So launching a new product line,
Uh-huh.
evaluating the profitability. Yeah.
Different, marketing campaigns.
So it's like having this like secret weapon in your business arsenal.
It is.
A way to make like really informed decisions
Yeah.
and navigate the financial landscape
Yeah.
with more confidence.
With more confidence, exactly.
Yeah.
And, one of the best things
Yeah.
is that it's fairly, straightforward to do.
Okay.
You don't have to be a financial wizard
Yeah.
to grasp those basic concepts
Yeah.
and, apply them
Yeah.
to your own situation.
This has been a fantastic deep dive
It has.
into the world of break-even analysis.
It really has.
I feel like we've demystified this crucial concept
We have.
and explored its practical applications in
Yeah.
a way that's both insightful and engaging.
It's been a pleasure sharing my insights with you.
Likewise.
I hope everyone listening feels empowered
Yeah.
to use this as a tool to make
Yeah.
informed decisions
Yeah.
and achieve those financial goals.
For sure. Whether they're running a multinational corporation
Right.
or just pursuing a passion project.
Absolutely. Remember, this was lesson 4 in our AQA GCSE Business Studies Finance series.
Until next time, keep those entrepreneurial minds sharp.
This episode was a PLC strategy production with AI audio provided by Google Notebook LM.